Today is April 28th. It's Wednesday. It's FOMC day. If you check out our friends at Financial Juice, you can see here that the FOMC meeting minutes are at 2 o'clock. The Fed is anticipated to not change interest rates today, and then at 2:30 is the briefing with Powell. So we expect volatility to sort of be quiet for the next couple hours, and at 2 o'clock we look for a big shift in volatility. Now, what's really interesting is the option setup here is indicating to us that this volatility could really extend for a few days, and we're going to talk about why. So the last time that the market was in this area, 4,200, there was much higher levels of positive gamma. Now, that was only a couple weeks ago, but we had a large options expiration on the 19th, and so that wiped out a lot of the positive gamma we saw. Now the market is back to that level, the 4,200 line, but there's less gamma in the market. And when you have less gamma in the market, we think that can lead to higher amounts of volatility. We can show you that if you look at our daily note. So this is the note that we send to our subscribers every day. If you sort of scroll up here, you can see we write some commentary. And then down towards the bottom is this data table. So in this data table, we want you to note two things. One, our gamma reading for today, which is 1.17. That's a positive number, which tells us that dealers should be hedging against the market and working to sort of hold volatility down. Now, based on this gamma reading in our historical model, we anticipate a 1% maximum move on the day, which is about 40 points in the S&P. Now, before we mentioned that last week or roughly 2 weeks ago when the market was at all-time highs, the gamma level was much higher. That meant that this number here, the 1.17, was closer to 1.5 or 1.6, and that meant that the implied move, this number, was actually lower. It was around 0.6% or roughly 0.5%. So now you can see that while we are back at all-time highs, because this gamma number is still positive but lower, we look for higher volatility today. Now, we're up against, the market is up against what we consider to be a major resistance line. So you can see that if we shift back here to this trading view screen, we can flip our trading levels on. This is a subscriber feature, by the way, which is pretty cool. And we can zoom in and look at where the market is relative to our key strikes. So you can see as we zoom in here, there's really two major levels that we're watching today. They are 41.97 and 4,200. So we just kind of combine those, and you can see what a resistance point that is proving to be as we kind of scroll sideways here. So we're up against this big resistance line, but we're looking for volatility to really pick up today. You can change this view and see it in a slightly different way if we come into our website. On our site here, we have our own new real-time charts, and you can see how the market is playing out against our major levels. If we scroll down a little bit, we want to show you this chart, which plots the total gamma at each strike. So when you look at this, you'll note that there is this very large bar at 4,200, and this is the resistance line that our model is picking up. Now, if the market breaks this level today, we would consider the market to be overextended unless the highest gamma level becomes 4,250. Now you can see this is 4,250, and we'll want to see all this gamma shift here, or at least this bar move higher. And that tells us that sort of the center of mass, so to speak, in the options gamma positioning is moving higher and agreeing or syncing with higher prices. So if the market does break 4,200 today, but the call wall level, our major resistance line, doesn't shift higher, we'll consider the market overextended. Now, we think that roughly 10% of S&P gamma expires today. And if we scroll down, we can show you a chart of that here. So in the spiders, it's about 16% expires today. And in the SPX, it's about 9% expires today. Now, we'd also note that Friday is a very large expiration in QQQ, with 20% of gamma expiring. And when you have that much gamma expiring, it's telling you that large options positions are shifting and changing around. So if we scroll back up to this gamma chart, the absolute gamma levels, so we want to talk about the downside levels now. We have 4150 as our major support line, which is only about 40 handles down. So we would look for that as support today based on that 1% move we mentioned earlier. As we play out the next several days, you can note that the gamma in this sort of zone from 4150 down to 4,000 really dwindles. This suggests that there's much smaller options positions, and you can tell that the bars here with calls on the top and puts on the bottom get smaller as the market moves down. And in fact, if you look at this area, and specifically 4,000 to 4,100, we've been calling this a void. There's just not much in the way of positions there. And so what this means that if the market starts to break down and the market starts to turn down through this area, we think that the volatility will pick up substantially. And so if the market does start to weaken today, we would look for support, obviously, on the day at 4150 into Friday, 4100. And then if the market does break this 4100 area, we would see the market flip to what we call a negative gamma position, which means that dealers may have to start to short. And as they short, we think that would lead to sort of a vacuum or a quick move down to this very large 4,000 area. So we think that 4,100, 4,250, those are the key levels into Friday. We think that whatever way the market sort of breaks today will determine, the next stop, either 4,250 or 4,100. And if 4,100 is tested into Friday, with the amount of gamma that's rolling off, we think that 4,000 would be in the cards into next week. So we hope this video was helpful. If you have any questions, shoot us an email at info@spotgamma.com. We are at SpotGamma on Twitter. And we will always respond to any comments that you leave in the video below. So thanks very much and enjoy the volatility today.